Okay, great. Okay, morning everybody. For those of you that meeting you for the first time, great to have you aboard, and looking forward to working with you over the next number of weeks. And those of you that I have met before, great to have the opportunity to talk to you again and to see you. And hope you had a good summer. Okay, so for those of you that haven't met me before, my name is Paul Daly. I did a bit of a sideways move away from credit and collections in the last couple of years, so I'm not working in that business at the moment. But prior to that, I did do 14 years working in both credit and collections, mainly on the collection side, but also did a couple of years on the risk side. So I worked for Oracle a number of years back. I worked for Philips Electronics, and then I worked for CPL, and then I moved into to the company where I've been for the last 18 years, which is Accenture. And I worked with one of their diamond clients for a large number of years, and it's nice to see a couple of former colleagues on the call. So hello Jennifer, hello Lorianne, nice to see you again. So did that with Accenture for a number of years. Did it with one of their diamond clients. To pretty much every line of business that they have. So did software, but also did some of the hardware pieces as well, and then moved on to the more advertising kind of side of things. And then also so did mainly collections, but it did a couple of years on the risk and credit side as well. And I suppose most importantly of all, a number of years back, I was sitting where you're sitting now, which was it was a more physical world. So it was actually in a classroom, but I was sitting where you are now as one of Declan's students. So once upon a time I was doing this course myself. So not quite 20 years ago, but it wasn't last year either, I'm afraid. Okay, but anyway, welcome aboard. It's great to get the opportunity to talk to you. So what I will do this morning is I am going to take you through a whistle-stop tour of the credit management course. Okay, so we're not going to go into any sort of real detail, so there's certainly no need to take any notes or anything like that. And just going to give you a flavor as to what it is that we're going to be covering between now and Christmas during the 4 modules. Okay, all right. So, I mean, in terms of how we manage the credit management course, the theme that's going through the credit management course throughout the 4 modules is we are following a model that Declan came up with, known as the ATTACK model. Okay, so the ATTACK model, ATTACK, ATTACK model. Okay. And what each of those letters in the attack in the acronym ATTACK stand for something. Okay, so the first A stands for assessment. Okay, which we'll cover off in module 1. The first T stands for terms and conditions, which we'll cover off in module 3. The second T stands for teamwork, which we will also cover off in module 3. Second A stands for administration, which we'll cover in module 2. C stands for collections, which we're going to cover in module 4. And then key performance indicators stands for, K stands for key performance indicators, which we're also going to cover off in module 2 along with administration. So the ATTACK model is the theme, and that's what we follow throughout the 4 modules. Those are the things that we're trying to cover off. Okay. So in module 1, as I said, we're going to cover off assessment. Okay. And what we mean by assessment is we're asking ourselves, we're asking ourselves some questions in relation to the trust that we're putting on our customers to pay us the money back. Okay, so when you embark on a credit relationship, you are essentially providing a product or a service, possibly as early as today, and you are trusting your customer are going to pay you back in some cases 7 days time, but possibly more often, 30, 45, 60, sometimes a little bit further down the track. So what we're going to cover off in module 2 is we're going to show you how to establish who it is that you're trusting. Okay, because you need to know some details about who it is that you are trusting to pay you back. Okay, you're going to be asking yourself, who am I trusting? How much money can I trust them with? How long do I think I can trust them for before I need to go and look for the money? And then possibly the most important question, are they able to pay the full amount back to you? Okay, because if you sell them a product or service, you want to get paid. You are trusting them to pay you in a little while, but you do ultimately want to get the money back. Okay, so we're going to cover all of those off in module 1. Okay. Now, how do we get the information that we're looking for in Module 1? We're going to get it through the credit application form. Okay, so a significant portion of Module 1 is covering off the credit application form. Okay, what is it that we're going to try and find out about our customer to try to make good decisions based on the feedback that they're going to give us in the credit application form. Okay, and why is it that we look for each of the information that's there? So, and I suppose at its highest level, what we're going to be looking out for, among other things, is what is incoming in terms of money and what is outgoing in terms of money, and that applies to both businesses and also consumers. Okay, so if you've ever applied for a loan, you will know well that you get asked about, okay, what's your income, but you'll also be asked about, okay, what money is going out the door as well. Okay, so based on that, we're going to try to come to a sensible decision in terms of how much money, what line of credit we can actually extend. Okay, so we're going to be covering all of that off in module 1. Yeah, I mean that's essentially it. I mean, module 1 is the assessment stage. So who is it that we're trusting? How much are we going to trust them with? How long are we going to trust them for? And are we confident that they can pay us back? So quick whistle stop tour of module 1. There's a bit more detail on some of the other ones, but any quick questions on module 1? No, we're good. Okay, so if we move on to module 2, so module 1 you'll be getting by Monday. Module 2 you'll be getting 2 weeks later. So module 2, we cover off 2 more letters. We cover off the second A, which is administration, and we cover off the K, which is key performance indicators. Okay, so administration. What we mean by administration, what we're going to do in module 2 in administration is we are basically going to look at your entire order to cash process. Okay, so we're not just going to be looking at the kind of collection side of things or the credit side of things. We're going to be looking at the entire order to cash process. Okay, so for the moment that you identify a customer or a customer identifies you and you look to start a business relationship, we're going to start at that phase and we're going to go all the way through to when you actually apply the payment to the customer's account and close the invoices that the customer meant you to close when they made the payment. We're going to look at all the steps from there to there. Okay, and the reason that we're going to look at all the steps from there to there is we're going to ask ourselves, okay, we're going to basically leave nothing to chance. We're going to have a look at every bit of detail that there is at every step of that process. We're going to be saying, okay, how do we make sure we get that 100% right? Okay, because if we get that 100% right, the opportunity for the customer to not pay or to delay payment or to default on payment completely is significantly reduced. Okay, not eliminated completely, but it's significantly reduced. Okay, and the vast majority of companies that struggle to get their money in do so because they get one or more things wrong somewhere in the process that allows the customer the opportunity to delay their payment or to maybe not pay at all. Okay, and if you eliminate those excuses, you eliminate those reasons, wherever they may be in the process, the opportunity for you to get paid on time significantly improves. Okay, so very, very key and very useful parts of the course. Okay, a couple of things we're going to look at in module 2. If I just drill it down a little bit more, we're going to look at your documentation. So I mean, your 3 key documents, your most important ones are your invoices, your credit notes, which obviously need to look different to your invoices. Otherwise you get what I've seen a few times before, where people are paying credit notes or they're deducting invoices as though they're credit notes. And we're also going to look at your statements. Okay, so what should your statements, your credit notes, and your invoices look like in order for you to go to the top of the pile in accounts payable and get yourself paid first. Get yourself paid quickly. Okay, so we're going to cover those off in module 2. Okay, what else are we going to do in module 2? We're going to take you through things that you should check every day, things that you should check every week, things that you should check every month, and things that you should check every quarter. Okay, so they're, again, one of the places where companies fall down in terms of credit management is maybe they don't check things maybe as frequently as maybe they should. Okay, so they check things weekly that maybe they should be checking daily. They check things monthly that maybe they should be checking weekly. Okay, so we're going to go through those and explain to you, okay, what should you be checking every single day, what should you be checking every single week, what should you be checking every month, and what should you be checking every quarter. Okay, and we're also going to take you through how you should report. So the second part of the module comes under the letter K, which is key performance indicators. We're going to take you through how you should actually report, okay? Because as Declan regularly says in his pitches, you know, credit management is one of the most underappreciated jobs in the company, okay? People who work in credit management work extremely hard, work very, very well, but yet maybe don't always get the glory that maybe people like the sales force actually get. So it's going to go through, we're going to take you through how to report. And you know, one of the reasons for that potentially is a lot of the times we're reporting on, what is our percentage overdue or what is our percentage 60 plus? You know, if we just flip that around and say, instead of saying that we have 5% of our accounts overdue and have senior management say, 5% sounds an awful lot. We should be saying we have 95% of them current, which sounds an awful lot better. Okay, so we're going to take you through, that's just a simple example. We're going to take you through all of the ways in which you can report in a more positive manner in order to get the kudos that you deserve for the good job that you do. Okay. And the final topic that we cover off in module 2 are methods of payment. Okay, so payment methods, there's ones you're probably very familiar with. Depending on your business, you may deal with cash. If you don't deal with cash, you probably deal with bank transfers. If you don't deal with bank transfers, maybe you deal with a lot of direct debits. Okay, so those are kind of some of the most frequent ones. But there are actually, I think, 24 different payment methods covered off in the notes. So we're going to take you through all of those, the advantages and disadvantages of each of them. Okay. So that's going to take you to the halfway mark and is going to conclude module 2. Any questions on that? Super. Okay. So I'll put away module 2. Then we move on to module 3. Module 3 covers off the 2 T's. Okay, so that covers off terms and conditions, and then it also covers off teamwork. Okay, so it takes care of the 2 T's in the attack model. Okay. So terms and conditions, the first thing we're going to talk about in terms and conditions are your actual credit terms, okay? So, a lot of people will say, okay, my credit terms are 30 days, but is that 30 days from the date the order is placed, the date the order is received, the date the date that's on the invoice, the date the invoice was received, which is a personal favorite of some of previous customers of mine. Oh, I didn't get the invoice till late, so therefore I'm going to start the clock now. When does the clock actually start running on your 30 days, your 45 days, your 60 days? Okay, so we're going to take you through that. Okay. All right. We're going to show you how to set the most appropriate credit terms. Okay. Which essentially are determined by the strength of your company, the strength of the buyer, the strength of the product, and also how competitive the market is. If you own the market, if you have a product that everybody wants and that market is primarily yours and you essentially have a monopoly on it, you can kind of set your credit terms any way you want. And your credit terms should always be the shortest possible without losing the business. Okay, so I mean, you want to grow your business, you want to make money. If you can make more money by extending credit, then you should. If you're not going to make any more money by extending credit, then you should really look for cash up front. So if you have a monopoly on the market, you can set your credit terms fairly close to the date in which the product or service is provided. If you're in a fiercely competitive market and you're trying to get a foothold in that, you are going to have to offer customers something that they're not getting already, which may mean longer credit terms. Okay, so we're going to take you through all that in module 3. We're going to take you through the most common mistakes that you have in terms and conditions. So, I mean, we mentioned earlier about getting things right first time round. If your terms and conditions are vague and unambiguous, and if you're sorting through them and you kind of say, oh, the customer has done something, but I don't have it covered off in my terms and conditions, it says they can't do it, and then you've got a bit of a problem. So we're gonna take you through a lot of the mistakes that you see in terms and conditions and how to make sure you get them right up front. We're going to move into kind of international credit management briefly for we're going to cover off something known as Incoterms. Okay, so Incoterms cover off where the responsibility of the buyer of the seller stops and where the responsibility of the buyer begins. So in some cases, the responsibility of the buyer begins when they show up at the warehouse of the seller and collect the product. And if they drop that going down the driveway, it's their problem. And then there's other scenarios where the seller will deliver the goods all the way to the buyer's home address or office address. And if they drop them coming up the driveway as they're about to deliver them, it's still their responsibility to cover the costs. So you can imagine the type of rows that would potentially start if it's not clearly called out. So we're going to take you through the Incoterms, which will explain to you how that is done. And if you check, I mean, when I was doing the course myself, I picked up one of our invoices at the office the following Monday and had a look at it, and the Incoterms were actually on it. So it is a live and real scenario. Okay, so we're going to take you through that in module 3. We're going to take you through how to create your company's credit policy, or if you already have a credit policy, how to check the credit policy to make sure that it covers everything that it should. So your credit policy essentially acts as a rule book or a playbook in terms of how you're going to manage the credit side of your business. You know, who's going to approve the credit limit increases, you know, what is the scenarios for putting an account on hold. So I mean, there should be consistency throughout in how you do that. It shouldn't be a case of, well, I'm in a bad mood today, so I'm going to block every account that is overdue, or I'm in a good mood today, there's been a big broken promise of payment, but I'm going to let it slide because, hey, I'm in a good mood. You know, so it takes you through, it removes all that. It takes you through, okay, these are the guidelines and scenarios that we're going to follow for increasing credits, blocking accounts, when is it that we go legal, these types of things, who makes the decisions in the company. We're going to take you through all that. Okay, so it's a meaty section. That's the first part. It's a little bit more than half of it, but it's the first part of module 3, which is terms and conditions. So meaty section, there's a lot in there. Okay. And the second thing we're going to take you through in module 3, as I said, is the second one of the 2 T's in the attack model, which is teamwork. Okay, so you know, we don't work in complete silo when we're working in credit or collections. We do interact with other parts of the business. Okay, so we will take you through how you should work with marketing to make sure that they're not, you know, proposing products that from a credit management point of view are going to be impossible to implement. We show you how to work with sales. You know, traditionally sales and credit are in constant conflict. It doesn't necessarily need to be the case. We're going to show you new ways of working with sales that'll help to remove those conflicts. We're going to show you how to work with your operations teams so that they're not billing where accounts should be blocked, that they will create, when things go wrong, they will create credit notes for you in a timely manner. And they can create credit notes for you in a timely manner. And we're also going to show you how to work with your service departments as well. So you don't have a scenario where the service department is providing great service for a customer who keeps ringing up, and then at the same time you're ringing on the other line, and you can never get to speak to the customer. So we're going to show you how to work on that. And then the final thing we're going to cover off in module 3 is your days sales outstanding, how to calculate your DSO. Okay, so your days sales outstanding in a nutshell, basically, if you're not familiar with it, it basically shows you how long it takes to get paid versus your payment terms. Okay, so if your payment terms for all of your customers is a flat 30 days, and you calculate your DSO and you find out your DSO is in the early 90s, you're probably not collecting as effectively as you possibly could be. Okay, because it should be a lot closer to 30. If, on the other hand, you calculate it and you find your DSO is kind of 34, 35 against your credit terms of 30 days, you're probably doing a pretty good job. And it means that most of your process that you've worked your way through from order to cash is probably working pretty effectively, and it allows you the opportunity to dig into the nitty gritty and the dark corners of your process that maybe you still have the opportunity to improve it further. So we're going to show you how to do that. There's a number of different ways to calculate your DSO. We're going to take you through what it means, and we're also going to take you through the various methods of how to calculate it. So very meaty module 3. Okay, I've done something so I can no longer see everybody, but how is there we go. That is the end of module 3. So it just leaves us with just one more to cover off. So I think we're doing well on time, actually. I think we're going to we'll catch up a lot of the time, I think. Any questions on module 3? No. Okay. So that just leaves us with the final module, which by the time we get to it, Christmas will be in sight. It's a scary thought. So module 3 is the one letter that we haven't covered off. Module 4 is the one letter that so far we haven't covered off in the attack model, and that is C for collections. Now, those of you that have worked with us already and who started back in February, you'll have already done your collections module. Okay. So your collections module, as you know, a lot of it is focused on your phone calls, effective dunning letters, how to send effective emails, what your strategy is for making the phone calls, and that kind of stuff. That's not what we're covering off in this. Okay, so we're not repeating that. What we're covering off in this in under the credit management heading is more where things have gone maybe quite wrong, or things are getting, I suppose, towards possibly the end of the business relationship. Okay, so the types of things we're talking about, the first one's a bit more positive than that. It's customer visits. Okay, so it's about building relationships and so on. So it's dealing with some of your biggest customers, how you build a successful relationship with them, and in the event that it's maybe a tougher visit that you're conducting, how you go about conducting that tougher visit to get the outcome that you want. So we cover customer visits as part of module 4. Okay. We're also going to cover off financial reviews. Okay, so how you actually arrive at a customer's office. It won't be. It's unlikely to be unannounced, but how you will arrive at a customer's office and get an opportunity to look at their books, and how you will determine whether or not there is future in the business relationship. We're going to be covering that off, what you should do, and how you should go about it. Okay. We are going to cover off how to manage debt collection agencies. Okay, so some of you may, in the past, and I certainly know I have, you may have engaged debt collection agencies, and how to manage and work with them. Apologies for the dog. How you manage and work with them to ensure that you have an effective working relationship with the debt collection agency, and you get the outcome that you want from them. And if possible, if it's maybe not too far down the path, how you potentially keep the customer as a customer as well, despite the fact that you have engaged a debt collection agency to chase up the debt. Okay. And then to close it off, we're going to deal with scenarios where, I suppose, effectively all of the good work that you've done, all of your good management of the process, all of your getting things right and so on, in spite of all of that, things have still gone wrong, which may may well be outside of your control, but we're going to show you how to deal with that. So we're going to teach you how to deal with insolvency, how to deal with liquidators. Okay, so if one of your customers gets liquidated, we're going to cover off how to deal with that. How to deal with receivers. Okay, so if a receiver is called in, that again, you're possibly talking about the very end of a working relationship, because that's fairly serious. How to handle examinerships, what you can and can't do if your company goes into examinerships, or in the case of a UK customer, administration, and also how to handle creditors meetings. Okay, so the theme of module 4, it's not your phone calls and your dunning letters, your emails, and those kind of things. It's more outside of that. It's how to deal with maybe more serious issues, which you won't necessarily encounter on a day-to-day basis, but if you work in credit management for a number of years, it will come up from time to time. So that's what we cover off in module 4. Okay. And beyond that, without drilling into any more detail, there's not a huge amount more I can say. I mean, as Declan said in the opening comments, it's four modules. There's a short test with each of them. There's no workbook for credit management. That's in the risk area. So you don't need to worry about that. There are 2 assignments which you'll be getting throughout the term as well. And then beyond that, that leaves 70%. You'll get 10% for the 4 short tests combined. You'll get 10% for each of the assignments, which comes to 30, and the remaining 70% is made up of the exam, which will be in January.
Super. It's all so simple, isn't it? Like some of you are there scratching your heads, going, "This sounds like a lot." It will be fine. You get into the flow, and I'm hoping, particularly credit management, because that's what you're doing on a day-to-day basis. That I'm hoping that you will get stuff that you can put into practice straight away. That's the whole point of it. So what I'm going to do now is I'm going to stop the recording.